I'm good, thank you. Actually, the session of Mamta ma'am is of 3 to 5. Yeah. So I'm taking the session of BCOC 136 at 3 to 5 p.m. and the Mamta ma'am will take today's session at 5 to 7 p.m. Right? Uh,
All right,
just
thanks.
just hold on for a minute. I'm sharing my slides. Just wait for a while.
All right, thanks.
All right. Now we can start the session that is the BCOC 136 relates to income tax law and practice. Basically, income tax law and practice are categorized into four blocks: Block 1, Block 2, Block 3, and Block 4, right? And in every block there are on 4 to 5 units. So in block from today's session I'm going to begin from block 1, which having 4 units in it. So the first 2 units relates to basic concepts, that is part 1 and part 2, and the unit 4 and 5 it's relate to residential status of a particular individuals, and you can save companies and many more upcoming topics, and of course the tax exemptions. So that will be considered into the next upcoming class, that is also relate to block 1. So in today's session we are going to learn all the basic concepts which relate to income tax law and practice, so that these concepts can be used and can be assessed in the upcoming following topics. So let's begin from the beginning, that is basic concepts part 1. Now, from the first slides, what is a tax? Tax basically is a fees that will be charged by the government on any particular product, any income of an individual or person, or any economic activity. For example, if you go to a restaurant and you have to pay any tax on the goods that you have purchased in the restaurants, and that's called in India, that is goods and service tax, which is called GST tax. So I will evaluate about GST as well in the upcoming slides in detail. So tax is categorized into two forms. The first one is direct tax and the second one is indirect tax. So direct tax are those taxes which has been imposed on any individual, or you can say person, on the income that the person has earned it, right? For example, if a person is working in a company, he's a salaried person. So the tax which is charged on his salary, which is charged on his income earned, it's called direct tax. For the example, we can say income tax, wealth tax in advance. These are all called the direct tax. The next category is indirect tax. Indirect tax are those taxes which is levied on goods and services. As I said, if any individual wants to go to a restaurant for a dinner to enjoy with his or her family, right? So, of course, any product during the dining table, he or she has to pay the tax, and that tax is called GST tax, that is goods and services tax. That is called if any for let's take another example. If a person go to a cinema hall and watch a movie, the tax that he has to pay is an entertainment tax, and which is in other forms in India we also call, because it is a good or services rendered to the individuals or persons, so it's also called GST tax. So there are various types of the indirect tax, that is called excise duty, custom tax, we can see GST tax, जिसको हम so we can say that is goods and services tax. So in case of indirect taxes, a person is shifting the burden of the taxes to the another person, right? If the one person has paid the indirect tax, the other person is also is or has to pay the this tax in the form of the goods and services that he or she is willing to take up in the future or at the present time. So in this particular slide, the tax is classified into two categories: direct tax and indirect tax. Let's proceed to the further classification. The two type, that is direct taxes and indirect taxes. Direct taxes is governed by the Central Board of Direct Taxation. Now question arises, what is the Central Board of Direct Taxation? Central Board of Direct Taxation is a part of the revenue which is being governed under the Ministry of Finance. It is also a statutory body, or you can say a statutory authority, which is being functioning to get the revenues from those people who are earning income or who are working in the various companies and earn a certain amount of salary on which the tax is chargeable on that on their income is called direct taxes. So such central board is also working under the Central Board of Revenue Act, that is 1963. And this act is always been is also formed due for the formulation or reframing the policies of the income tax, you can say, of the individuals, so that each and every person has an equality, right, to pay the tax on their income, whatever the income called for. So always see, the direct tax is always imposed on the persons on their income that he or she has earned, right? And that tax is paid directly to the government. So there is no third party. There is no third party authority who can take the money from the individuals and pay directly to the government. No. If you are paying any tax and that is directly goes to the government, is called the direct tax, and which comes under the Central Board of Direct Taxation, right? Let's proceed to the next one. Next term is indirect taxes, which is also comes or governed by the Central Board of Indirect Taxes and Customs, right? And such taxes are imposed on goods and services only. As I said, if you go to for a movie and you have to pay a tax on it, which is called GST tax in the form of entertainment, right? If you go for any buying any product from Amazon, if you're buying any product from Flipkart, if you're buying any product of any other source online platform, the GST will be applicable, because the product that you have bought is always applies on the GST, that is at the rate of 18%, right? So this is called indirect taxes. So when we talk about that, the tax that you paid on goods and services is either goes to directly to the government or not. No, it's not directly go to the government. It goes to the government through the third party. right? If you pay the tax to the cinema hall or the concerned authority of the cinema, that tax, your tax will be paid indirectly to the government by them, not by you. If you are paying a tax by yourself and it goes directly to the government, it's called direct tax. If you are paying a tax indirectly, that means through a third party, like on behalf of somebody else or by someone else, it's called indirect tax, because that goods are chargeable on goods and services. Let's proceed to the next is why the taxes level, that why the tax are being imposed. So there are the various reasons. There are two main reasons, especially when it comes to the taxes imposition. The main reason for levy of taxes that it constitute a basis source of revenue to the government. Of course, if the government has to formulate the policies related to the taxes, that is direct tax, income tax, custom tax, wealth tax, entertainment tax, any other taxes. So, of course, if you are paying the taxes to the government, so for the government, it is a source of income. It is a source of revenue that will be utilized for the public only and for the welfare of the people. So that's the main reason the taxes are necessary to impose on the income of the individuals or on the companies, right? Next is the revenue which is being increased or raised is always being utilized for meeting up the needs of expenses of the government. As I said that the tax that you pay is always being used for the welfare of the people. And what was the welfare of the people is like that to provide to open up the educational institutions for the public, to open up a new defense services to the people of the country. There is also always to open up a provisions for the healthcare centers or hospitals, opening up a new hospitals. We also develop the infrastructure facilities like the roads and dams, or you can see any other infrastructure which is applicable or for the welfare of the people, like opening up or constructs the societies so that the people could live there who doesn't have any home under their land. So that's the main reason the tax are imposed on the incomes of the people. So this is the two main reasons. So you can elaborate with the help of the examples as well in your final examination. Let's talk about the history of the income tax law in India. So, when we talk about the income tax law, and of course, the income tax is the most significant category of the direct tax. An income tax law of India, which has always been governed by the Ministry of Finance, and it comes under the Central Board of Direct Taxation or the Revenue Act of 1963. So it has a five main components, which has been mentioned on the slides as well. So the first one is the Income Tax Act 1961. The second one is Annual Finance Act. Third one is Income Tax Rules 1962. Then we talk about the circulars and the notifications related to amendments or re-amendments of the policies related to direct tax or indirect tax. And the next one is the legal decisions of the courts that who have a supreme power so that to amend or reformulate or formulate the new laws related to the taxes, and the supreme power, of course, the Supreme Court. And the High Court is also applicable, relevant to the state wise, right? So the next one, let's proceed in detail about these income tax laws. So the first one is Income Tax Act 1961. The This particular act is being governed by the Income Tax Act 1961, and actual in India it came into a force on 1st April 1962. It was in 1961. It was trying to implement such act, but actually it was implemented on 1st April 1962. This particular act contains 298 sections and 14 schedules, and such section is applied into various categories of the taxes which is going to be imposed and leveled on different categories of the persons. So persons is or person has a different categories under the income tax law. A person is not only individual. A person is also a company. A person is also a body of individuals. A person is also an artificial person. A person is also a judicial person. A person is also, you can say, a body of individual or an association of person as well. So, if we cannot consider a person is only an individual, a person has, under the Income Tax Act, the person has various names which has been assessed in different manner under Income Tax Act, right? So the next is these acts is always being changed every year with some additions, it with some deletions, and every year it will always been brought down with some addition has been made in this act, some new formulations, one new policies has been developed in this act, and such act and by and such act is always been comes under the Ministry of Finance Act, and which always been passed by the Parliament of India, right? So if any act is being developed or is willing to implement in India, first he has to get an approval by the Finance Act under the Ministry of Finance Act, and then it passed by the Parliament of India, and then ultimately it will implement in India. The next one is, in pursuance of the power given by the Income Tax Act, the rules which has been framed to facilitate a proper administration of the Income Tax Act. So when such act has been implemented, so of course supreme power has been received to the concerned authorities or Indian authorities which is relevant to the direct or indirect taxes. So they have a full right to frame such new rules and regulation which is pertinent or relevant to the welfare of the people under such act which is called Income Tax Act 1961. The next one is Annual Finance Act. Finance Act is a financial legislation which comes under the Ministry of Finance, and such act had always been framed annually, and the various amendments and the re-amendments related to the excise duty tax, custom duty tax, income tax, wealth tax, goods and services tax. So, such taxes, when it comes to formulate and implement in India, so various amendments and re-amendments has been implemented and has been changed according to the years, that is annually basis. So any changes which is going to be made in India is on an annually basis. If any budget it has to made in India related to finance budget or annual finance budget, so it has been formulated and implemented at the end of the year. So every year, the finance minister of the government of India presents a budget to the parliament, and it categorized into two parts, the part A and part B. Part A, it always been concludes about the plenty of policies related to the fiscal areas, like we can talk about interest rates, bank interest rates, we can talk about the loan rates, we can talk about the tax slab rates as well on the individuals, right? Part B, it's cover of a budget speech which always been contained detailed proposals, fiscal proposal or finance proposals to the parliament, so that the parliament will go on through each and every proposal, and accordingly they will take up a final decision related to the act. Let's talk about the next term. In order, when the particular ministry is need to implement such the proposal or above proposal which is going to be presented under the parliament, so the finance bill is introduced in the parliament, right? So there is a bill which always being formulated, and that bill is called the finance bill, because we always talk about the financial part of the country, the financial legislation which is being under the Central Board of the Revenue Act, right? So once the finance bill is approved by the parliament, and when something has got approval by the parliament, it always have a power to amend the changes which is applicable if necessary for the welfare of the people, but it always been under the Finance Act only. So on annually basis. So any act which related to the finance legislation, it always being implemented on annual basis only. So if some of the countries who has been announced the finance bill on the quarterly basis, which has not been implemented, it always been in the process, and at the end of the year it's going to implement once the final decisions to be taken by the parliament. So the next one is Income Tax Rules 1962. So such, when we talk about the rules, we always talk about the rules pertaining or relating to the central board of direct taxation or central board of indirect taxation and the customs. So whatever the administration, whatever the policies could be made up related to such tax rules pertaining to income. So always the rules which in follow, that is Income Tax Rules 1962. So the administration of all the direct taxes, it comes under such rules, that is Income Tax Rule 1962, and it always been governed, it always been controlled by the Central Board of Direct Taxation, which I already explained in the earlier slide, that you have to pay under the Central Board of Direct Taxation. Any individual has to pay the taxes directly to the government, the income that you have earned during a year, right? So the Central Board of Direct Taxation is empowered to make rules for carrying out the purposes of the act. So this act is always states, so whatever the changes could be made, make it under this act only, or under such rules which has been formulated in 1962. So every year the rules will amend. Every year the rule is re-amend relating to the taxes, and whether taxes relate to the direct tax or the indirect tax, every year it has been re-amendments when it comes to under the bills. So, for the proper administration of the Income Tax Act, the Central Board of Direct Taxation frames rules time to time. So, it is their responsibility to make up the rules, to amend the rules, or re-amend the rule, or edit or delete the rules according to the time period whenever the needs pertains. So these rules are collectively called income tax rules. So any rule, like for example, okay, fine, for the salaried persons, the income tax slabs that up to the 5 lakh, there is no tax to be charged on their income. So suppose this is the rule has been made. So this rule will apply and comes under the Income Tax Rules 1962. So it is very important to keep in mind, along with the Income Tax Act, that these rules should also be studied. We always think that, okay, fine, the acts, there are so many acts, and that's true that under the income tax law in practice, there's plenty of acts that you have to remember. You have to apply in your theoretical part, you have to apply in your practical part as well, which will be teach in the upcoming sessions as well. But it is very important before you apply something in any of the theoretical aspects, these rules must be studied, and these rules must be you can see apply when it comes to the practical aspects, right? So every taxes, whether it's direct or indirect, have a practical expected how the income to be calculated for the salaried person, how the income is to be calculated for the how for the from the property, how the income could be calculated, how the income would be calculated from the capital gains, that how the income to be calculated from the puzzles from the house sources, house races, how the income would be calculated when it comes from the agricultural purposes. So these are the particular incomes, and there is a practical, you can say, calculations and the formats for policies, rules, formulas, which have to need to be followed, and accordingly we can calculate the income under the income tax rules under the Income Tax Act 1962. So next talk about the circulars and notifications. So if any circulars related to any changes from time to time, it always announced in all over India through the web portals, through the public notices on any of the social platforms. So if and whatever the circulars to be framed is always being framed and governed by the Central Board of Direct Taxation only, right? Because this it is a part of the revenue under the Ministry of Finance, and that Ministry of Finance always comes under the Central Board of Revenue Act 1963, right? So any circulars which are issued by the Central Board of Direct Taxation, it's always been time to time framed and to deal with the certain specific problems, if any, and to clarify any doubts regarding the scope and meaning of such provisions, of any provisions which has been framed in India. So these circulars are issued for the guidance of the officers as well as of the SSCs. So who are SSCs? SSCs are the persons whose income is taxable above above any specific limit of the taxes of the income. So these circulars are issued according or for the guidance of the officers or SSC and such departments. And when we talk about the Central Board of Direct Taxation, so the Direct Tax Department is bound to the is bound by the circulars, because the circulars which has been announced and which has been in India, so they're bounded. They have to work according to the circulars, what has been written in the circulars under direct taxes or indirect taxes. If the government has announced, okay, the indirect taxes, the goods GST, the goods and services tax is to be 20% on entertainment taxes. So it is written in the circular. So 20% taxes will be chargeable. You cannot reduce according to your wish. Okay, no, not 20%. We can charge 18% as well. No. It 20% means 20%. That means they're bounded by the circulars, right? So while such circulars are not binding the SSCs, they can take advantage of beneficials of such circulars. And of course, if any circulars always come in India and it is beneficial for the SSCs or for the people or for the persons, so definitely they are free and come and take the advantage of such circulars which thinks that, and that they're beneficial to their own self or for their income, right? So this is the circulars and notification which comes under such rules and laws. Let's talk about the case laws. If, like for example, if any of the income tax law that deductions under section 80D under sections 80CC rules and laws. So these particular cases and the related to the laws has been always be a part of the study when it comes to under income tax law and practice. So the studies of the case laws are very important, and it's unavoidable part of the study of income tax law. So when we start exactly the income tax, like in how to income from salaries to be calculated, we have to follow the case laws. We have to follow the laws that in these particular laws, this is a particular way and this is a particular prescribed a precise manner that to estimate the income from the salaries part. So the salary is not the salary that you work in a company and you will get. Salaries has multiple categories, plenty of categories that you need to understand, and accordingly you have to calculate your taxable income from your salary. So it is not possible for the parliament that every time they will you can provide all the possible issues, and that a person or a student has to read and consider in their theoretical concept. It is not possible. So whenever you can study the exact cases of the laws related to income tax act, and whenever the needed arises or raised, you can apply or you can use in your theoretical part, right? So if any of the issues concerns between the sscs and the departments, so the courts are always be there to help them out or to sort out their cases according or during a particular consecutive years, right? So as I told you, the supreme court is a apex court, and whatever the decision has been taken by the supreme court, it always been applicable in all over the india. So the decisions given by the high courts, which always been applicable to the within the states only, and that particular decision is to be followed in that particular state. For example, if the High Court of Madras, of High Court of Haryana, has took any decision related of the issue of the direct tax between one company or and the SSC. So that decision has to be applied within that state, that is Haryana. So that decision cannot be applied to Madras or Calcutta or you can say New Delhi. No. So if decision has been taken to such taxes in Haryana only, so the decision has to be followed in Haryana only, and that states the High Court. So this is a laws, a basic concepts that if any law applicable, any new law has been developed, you have to follow accordingly. So you cannot change the laws according to your own wish, right? So let's talk about the next is levy of income tax. That income tax is a tax that's levied on the total income of the, you can see, previous year of every person, right? So a person, as I told it in the earlier slide, a person is not individual. A person includes many categories or many names, which always have their own meaning, which always have their own pattern of calculations in terms of their names. So a person includes an individual, an Hindu undivided family. Hindu undivided family is that term where in a family only a one person, that is karta, who works and manages the whole family, who is the eldest member of the family. For example, if any like there is a family of 6 members, right? So the person who has the highest control and authority in the family, he's a karta. So that include, and that family is called Hindu undivided family. Then he's a controller, he's an authorizer who always take a decisions for their own family members, as he's a karta of the family. And that family is called, when the word name contains any karta in the family, it becomes a Hindu undivided family, right? The next one is association of persons. Association, we always talk about the group of persons who always aims to achieve some specific objectives relevant to their own purpose or for their own formed company, right? Next one is body of individuals. We always, body of individuals, always they talk about communities, right? Where we can speak about the you can say a group of individuals which is in larger number and who work on a common purpose. So That particular term stands for body of individuals. A firm and a company who always work for the profit or for the welfare of the company, and of course considering the matters and concerns and issues related to the law, income tax laws, of course during the financial year or during a years. Artificial judicial person. So if we talk about any legal agent, or we talk about any legal authorized person, or you can say custom duties you can say authorized person. So is that who always work according to the law, who always amend the rules and regulations for the people according to the act. And that kind of person is called the artificial judicial person who work under the high courts, under the supreme courts, under the consumer courts as well, right? So now we talk about the taxation of India, which is always, in other words, we call the taxation system. So we always have a two categories. I don't repeat the meanings of these two words. So direct tax is considered income tax or wealth tax, and there is another type of tax, that is corporate tax. Corporate tax are those taxes which is being chargeable on the gross profit of the companies during their consecutive years or during the previous years, right? So that tax is called corporate tax. So when we talk about the indirect taxes, which always include the GST and exclude the custom taxes. So it categorized into two forms, that is intrastate supplies and interstate supply. The question arises is what the meaning of these two words. So intrastate supplies, let's take an example. If the trader of one state wants to supply the goods, or let's say of rupees 10,000 or 15,000 rupees, right, to the another client of the same state, it's called intrastate supplies, right? That the supply of goods within the states. Like if I belong to Guru Haryana and I supply the goods to the client in of Haryana only, it's called intra-state supplies, where the GST is applicable. Now the question arises is under intra-state supply, how the GST will be applicable and how the calculations is to be applicable. So let me tell you. So when we talk about any supply of goods to any of the concerned clients or our clients or different companies clients, the 18% GST will be charged on such goods. That goods would be the consumer goods, that goods would be any type of goods. 18% means 18%. It cannot be reduced. It cannot, nobody can charge above 18% as well. Right? So now in intrastate supply, it categorized into two parts. That is CGST and the second is SGST. Now CGST is a central goods and service tax. SGST is a state goods and service tax. So if I talk about that 18% will be charged on intrastate supplies of goods and services, that means 9% charge on CGST and 9% will charge on SGST, right? That means 9% tax of the amount earned directly goes to the central government, and the 9% tax, it directly goes to the state government. So if I belong to Haryana, so that is the state government. So if I pay tax, that is 9%, right? So my 9% tax on goods and services that I have paid to buy it. So that tax directly goes to the Haryana government, right? And 9% tax will directly goes to the central government. When we talk about intra-state supplies of goods, it means the supply of goods within the states, right? The next one is interstate supplies. Now we talk about interstate supply means the particular trader supply the goods to different states, right? For example, if the trader of Karnataka supply the goods to their clients who belong to West Bengal, who belong to you, or you can say Haryana, right? That particular supply of goods is comes under interstate supplies, where the GST term is called integrated goods and service tax, that is called IGST. So when we talk about interstate supply, goods and service tax will be applicable, and that tax rate is 18% only, right? So if you supply, if one person is supply goods in different states, 18% tax will be chargeable, and that 18% tax on the amount earned will directly goes to the integrated goods and service. That means it directly goes to the central government only, right? So if any IGST applicable, that means such tax will directly goes to the central government, and such tax will not be classified or distributed among the central and state. No. If we talk about intrastate supplies of goods, the taxes will be distributed among the two, central government and state government. So when we talk about the interstate supply, only the central government has a right to collect the taxes or to collect the revenues when it comes to the supplies of goods within the different states. So this is a procedure. The taxation system is in India. Let's proceed to the basic concepts of income tax law. That is, what is tax? I don't need to explain again because I already explained in the earlier slides as well what is tax. So tax is a payment made to the government without any return. So once you pay the tax, you will not get the tax in return because that is a revenue for the government. Next one is duty. The duty taxes, right? It always been imposed on goods and services only. Next one is cess. Cess is a tax which is being imposed or levied for a specific purpose. Like for example, education cess. So, if the students or the, you can say, who are physically handicapped, so special education cess will be provided to such learners, and that tax or that is, you can say, cess becomes that called education cess, which is a tax which is always for the specific purpose. That the tax will be charged or imposed on the physical handicapped learners or the persons, like that. Let's talk about the next term is surcharge. Surcharge is an additional tax burden. So, like for example, your your gross income is this 10,000, and after getting all the taxes to be deducted, it becomes the net income, right? And from the net income also, there is also an additional tax burden to be deducted, which is called surcharge. So, surcharge is an additional tax burden which is imposed on the income earned, you can say, of the persons. right? Beyond this specified limit. If, like, for example, if the person has earned 20 crores, so they have to pay a surcharge because that is a beyond tax limit which has been prescribed by the under the Income Tax Act, right? So that term is called surcharge as well. Next one is income tax, which are always being imposed on the income earned of the persons or people. Levy is not a tax, right? It is an act. It is a process of charging the tax. That how this process and how this act will be imposed and what way the taxes would be imposed on the various categories of the persons. The next one is, what is the meaning of income tax? What is income tax? So the income tax is the tax which is being charged or imposed on the income of the persons. It is also a revenue for the government. Other now question arises is what? It is in cash, it is in the form of gifts, it is in the form of grants, it would be anything, right? So it always indicate the outflow of cash for a person who is liable to pay the tax. Income tax is a tax levied on the total income of the previous year of every person. It doesn't mean that okay, income tax is the tax which has been imposed on the income earned of the person or the people. No, the income that they have earned during the previous year, on that income the tax will be chargeable, and that tax which has been levied and imposed on the income earned during the previous years by that person or individual, that tax is called the tax is chargeable is called income tax. So the always be remember, any tax which is chargeable on income during the previous years, that tax is called income tax. Next one is important terms of income tax. It is very important to when we proceed the upcoming chapters of income tax law and practice. It is very important the basics, the concepts of income tax, which is person, which is I already told you that person include around 6 or 7 categories. SSC, assessment year, previous year, assessment, income, dividend. So let's proceed. What is person? Person comes under section 2, subsection 31, right? So according to the law, SSC is a person by whom any tax is payable. So a person include would be any individual, firm, Hindu undivided family, a company, an association of persons, a body of individuals, a local authority, right? So local authority we always talk about in Delhi is the Municipal Corporation of Delhi. If we talk about Gurugram, is the Municipal Corporation of Gurugram, right? Where who works for the state about their roads, railways, management and administrations, right? Waters facilities is always comes under the local authority of that particular state, right? The next one is any artificial and judicial person included in the, you can say not included in the above category. So when we talk about any artificial person, which always terms person, but it doesn't come or include under the income tax because it is you can say long procedure which is need to be followed when it talks about the artificial person. We talk about the judicial person as they are always a part of the law. Next one is meaning of SSC. So, and the meaning of SSC is under section 2, subsection 7. SSC means any person who is liable to pay any tax or any other sum of money under this act is called SSC. So every person who is accessible in respect of any income or loss of another person who is deemed to be SSC, that means who has right to be an SSC as he's paying a tax, and who is deemed to be SSC in default or by default or by chance, or you can say he has right to be called an SSC as he has paid the tax during the previous years, and all the previous years is called SSC. Next one is assessment. What is the meaning of assessment? Assessment is a process where we determine that whether the income that has been calculated is correct or not, whether the income the assessment of income has been followed exact, you can say, rules and regulations of the act, and how the income has been calculated under the income tax policies. That's called assessment. So we need to assess a particular, you can say, tax authority has a, you can say, right to assess that whether the income has been calculated in the proper, precise manner or an organized manner or not, and what are the facts that they have shown during the calculation of the income or during the calculation of the tax be based on their income is actually correct or not. So that part, that process is called assessment, to find out that whether the income is correct, calculated, or during the previous years or not. So if anything has been in default, if anything has been come under unfair, unfair or any untrue facts, that means a tax liability, or you can say a penalty will be imposed on such person or individual, right? So it is a act to assess whether the income has been calculated in a correct way or not. Next one is meaning of assessment and previous year. It is a very important concept when we calculate the incomes, when we calculate the tax of the, you can say, various categories of the person. So always be considered these 2 years only. Whether the income is being calculated based on the previous year or based on the assessment year, or if whether the income is calculated based on the previous year for the assessment year. So you need to understand these two concepts. So when we talk about the assessment year, so the basic need to understand it when it commences, when it ends. So this means the year commencing on the first day of April every year and ending on 31st March of the next year is called assessment year. Is one of the old example I have considered, that is the current assessment year is 2018 and 19. So when we're talking about the previous year, the previous year would be 2017 to 18. If the assessment year is 2018 to 19, or let's say for assessment year is 2024 to 25, let's say the assessment year is 2024 to 25, right? So what would be the previous year? The previous year is 2023 to 24. So the previous year means the financial year immediately preceding the assessment year. So you need to understand what is the assessment year and what you can see the need to understand the previous year, because the income that you have earned is during the previous year and the tax will be chargeable for the assessment year, right? So any income which is taxable and calculated, which is based on the previous year, but on what year we are calculating for, is for the assessment year. That means for the next year. That is assessment year, which comes under section 2 subsection 9, right? And the previous year it comes under section 3. So let take few examples more. This is a case of the when we start up or a newly started business. So what was the previous year? What would be the assessment year when we start a newly started business? So let's read. So, in case of the newly set up business during a financial year, the previous year shall be the period beginning with the date of such setting up and ending up with the said financial year. That means immediately following March 31st. So, the date of the business, just hold on for a minute. This is just not working. Oh, the charging is working. Just hold on for 2 minutes, students.
Hello guys, what has happened?
I don't know. He's left. He said wait for 2 minutes, but I've just noticed he's left the meeting.
We're trying to raise hands,
Did you
but he's
actually
not
tell him that it's
recognizing.
very fast?
Anyway, let's wait for him to come back because he mentioned something about charging his laptop. I think his battery got low or something. Then he said wait for 2 minutes, but now he's left the meeting. I'm sure we'll be able to notice when he's back.
Okay, okay. We are all here.
So, like today, are we going to ask questions or what? I don't get it.
I think at the end of the class he will ask us.
I doubt that territory is cruising. I think the best thing that we can do is maybe since he's not seeing us raising hands, I don't know if we're supposed to interrupt him or just directly ask. Because again, we can't be able to remember all the questions that you have at the end of class. It's actually better you ask something once it's explained.
Exactly. That's what I'm saying. That's what I'm saying. Or is somehow when he's done, then we are now taking him back again to explain something.
No,
But
I think
Yeah,
I think
like
the
it
best
can be
solution is
possible.
wait guys. I'm not
Some
Because
of
sorry.
the
we'll forget
questions,
some of the questions.
yeah, we need to ask
Exactly.
immediately.
Yeah, that's the thing. Because we'll forget.
Sure.
wait. You guys need to be jotting your questions down.
Huh? Me, I'm dropping in the message.
You have to jot it down after the class, then you can ask him.
Ah, I'm not sure if it's going to be possible. Maybe we should just teach each other about it.
I think it's back.
Sorry, your mic is on mute. You're not able to get you. Your mic is still on mute.
Sorry. Thank you for letting me know that my speaker is on mute. All right, I begin once again a case of the previous year. So when we talk about in case of a newly started business, right? So the previous year, let's say 2022 to 23 would be the previous year, and the assessment year would be the upcoming year. For upcoming year, that is 2024 to 25. That would be the assessment year. So, like for example, you have started a business in 2022, right? You have started your business in 2022. So what would be your assessment year? So your assessment year is 2023 to 2023 to 24, and your previous year would be 2022 to 23. So this is a difference between the previous year and the assessment year. Assessment year is that year which is being calculated on the income earned is taxed, is assessment year. So for example, your income is calculated on all the previous years, but for which assessment year, which for calculated for which year, that is 2023 to 2024. Same for a newly started business. If your business has been started in 2022, so your previous year would be 2021 to 2022, but it will not be counted because your business is started in 2022. So your previous year is 2022 to 23, and your assessment year is 2023 to 2024, right? So if any business is written, it's already written in the question, and if any business started their business on 10th October 2017. So the previous year is 2017 to 18, and their assessment year is 2018 to 19. As I said, if I have started a business in 2022, so my previous year is 2022 to 23, and my assessment year is 2023 to 24. So this is a big difference between that how you estimate the previous year and the assessment year while we calculating the income based on format following up the rules and regulations under the Income Tax Act. Right, as I told the previous years, the date commencing from 1st April 2021 and ending is 31st March 2022. 20, you can say 4 or 2023. So that would be your previous year. An assessment year is the upcoming year. That is always begin from 1st April to 2023 and the ending is always the 31st March 2024. So this is a difference between the previous year and the assessment year, right? Any questions you would like to ask between that, how you differentiate between the previous year and the assessment year? Any questions? Any
All right.
questions?
Uh,
Yeah,
I've got a question
yeah, please
from
ask.
your from the diagram or from what's on the screen. It shows that the business started
Correct.
somewhere of October,
Mhm.
but it's still counted till the following year. I think that's in, is it March? So is it that there's a specific given period in which a year is supposed to begin? Like you said, it ends on 31st March, then it starts on 1st April, or maybe any month can be given.
Yes, that is, yes. This is a rule under Income Tax Act. I'm not saying this. I'm not saying that you have to consider these dates. This is not my rule has been formulated. This is a rule which has been formulated under the Income Tax Act, which states that any year which commence that is on 1st April of any year and that year will be ended on 31st March of any year. So if we talk about if any business has been started, let's say in 2022, let's say 31st August, the business has been started on 31st August 2021, right? It means this particular business financial year will be counted begin from commence from 1st April 2021 and it will be ended on 31st March 2022, right? And the assessment year would be 2023 to 2024. And that is the basic difference between the 2 years, previous and assessment year. And these commencing and the ending date of the financial year has been formulated under the Income Tax Act, and you have to follow that. So you cannot think like that, okay, we can consider some according to ourselves the particular dates and the years, not like that, right? So you have to follow accordingly to the rules, and the rules has already been stated by myself. It's already been explained in the various slides. And when we talk about the various questions related to previous and assessment year in the calculations of the income, follow up the rules and regulation, that will be teach in the second section, that is residential status and how to calculate the income and how to know whether the particular person is resident of the country or not, whether he's an Indian citizen or not. So that will be teach and how to calculate the income and residential status of the particular person. That will be considered according to the previous year and assessment year dates only. And that's the main reason I'm here to explain to you each and every word related to this particular two terms, previous and assessment. So I hope the query that you have raised for me, it has been sorted.
Yes, my question has been answered. Thank you.
Any other questions related to these? So if any business is like, for example, let's take another example. I have started my business in 2023 in May. I have started my business in on 10th May 2023, right? So what would be my previous year and what would be my assessment year? Can anybody can tell me the answer? I have started my new business, right, on 10th May 2023. What would be the previous year and what would be the assessment year?
The previous year will be
First of all,
1st
please tell me
April.
your name. First of all, please share your name and then you answer the
All right.
question. Right? Yeah.
Benjamin Lowe. Yeah. In that case,
Okay.
then the previous year will be the 1st April 2024 up to
Okay.
31st March 2025. Then the assessment
Okay.
year.
Okay. The previous year that let me clarify. My business has been started on 10th May 2023. So my previous year commenced from 23 to 24, right? 24 till 31st March 2024. That means my assessment year would be 2024 to 25. It's in the slides as well that how has been
I,
generated this information. For example, I
sorry, I
repeat
think
once
it's
again
network
for you
problems.
all. No, it's not. It's not correct. Exactly. The answer that you have told, it's correct. So that's why uh, 23 beginning from 2023 and ending from 31st March 2024. And my assessment year begins from 1st April 2024 and ends March 2025. Previous year and the assessment year. So the assessment, as I told you, what is the previous year? Previous year is preceding assessment year, right? So if you think, if you listen very carefully, I told my business is started on 10th May 2023, right? So what would be my assessment year? My assessment year would be the next year, that is 2024 to ending is 2025. This is the way how you answer the question. And the previous year is my business started 2023. 2023 and is 31st March. It's written at the previous my business is on the slides. The date of starting the business is up to 2017. So the previous year, the previous year should be 2017 to 18. It means this is 2017 October. So 2017 and ending of the previous year would be the 31st March 2018. It's written here in the particular slide. And what was the assessment year? Assessment year would be the next of the previous year. So if the previous year is 2017 to 18, so your assessment year would be 2018 to 19. That means first, you can see its date is written here, 1st April 2018 is the beginning of your assessment year and the ending of your assessment year is 31st March 2019. Is it clear to all? Should I proceed further?
Yes, sir, it's clear, sir. But
Yes,
I have a
it is
question, sir.
clear.
Um, this this rule, is it only applicable to India or is a nationwide rule? That's my question, sir.
Okay. This rule is applicable in every country, first of all, but it depends on the rules because the rules its changes according to country. So in your country, might be the concept is same in all the countries. The meaning is same in all the countries. But how you portray your answers, how you formulate your answers, it might be a different. It might be a different, it's a very little difference would be there. Concept is remains the same in all the countries, it never be changed, right? So you can follow the same concepts which you are learning over the slides in every country because the meaning is same in all the countries. Whether you can go to the US, how the previous year and assessment year to be calculated, the same ways would be calculated. Right? If you go to the Canada, if you go to India, if you go to some England, the same particular rules are applicable to you. Right? I hope I have sorted out your query, student.
It's
Excuse
clear,
me,
sir.
sir. The audio quality has not been okay.
Okay. I hope I have sorted out your query. So still you have any doubt or still you have any question in your mind, just let me know.
Hello, sir. Okay, you were breaking, so I didn't get about the previous year and the assessment year. Can you please repeat again?
Sorry to interrupt. Your voice is interrupting. Your voice is not clear, student. So I'm not hear you. It's not able.
What I'm saying is that you were breaking, so I couldn't get what you explained about the previous year and the assessment year.
Okay. If you can see the slides, it's like it is already clearly explained, right? So let's take another example, except the example has been stated in the slide. Let's say I have started a business in 31st May 2022. Let's say I started a business on 31st May 2022. This is my starting year of the business, a newly set up business, right? So now I need to find out what would be my previous year and what would be my assessment year, right? As I said, my business is started on 31st May 2022. It means my previous year is 2022 2023. That means my commencing date of the previous year is 31st May 2022 and ending of the previous year is 31st March 2023. Then my next question arises is what would be my assessment year of my newly started business, which has been started on 31st May 2022. So the previous year is 2022 to 23. So my assessment year would be 2023 to 2024. But how you show up theoretically that what would be my assessment year? So my assessment year is the commencing date of the assessment year is 1st April 2023 to March 2022 will be the succeeding year. In other words, I hope it is cleared now.
It is clear, sir. Thank you.
It is clear to you, student?
Yes, it is clear to me. Thank you.
Okay, most
It is, sir.
welcome.
Thank
So
you.
let's All right, so now the next concept is income. Most of the people thinks that income is that what we have earned is exactly that's income. No, the income can be the income that you earn from your salary is also part of your income, but we cannot say that is exactly income, right? Any income that you earn from your salary is also an income. Any income that you earn from your house property, whether it will be sale, whether it will be rented out, it's also part of your income, right? That is also considered as income. Then any income that you have earned from your capital gain. What is the meaning of capital gain is? Capital gain is when a particular seller sells a property more than the original price is called capital gain. So now the question arises, what is the capital loss? So it's a vice versa, is a capital loss. I repeat once again, any income earned from capital gain is also a part of your income. But what is the meaning of the capital gain is? Any person sells a property more than the original price is called capital gain. Let's take an example. A particular person has a property and its original cost is 10 crores, right? So he sell his own property, the same properties in 12 crores. So the difference of 2 crores under income tax act is capital gain. If we talk about normal in accounting terms, oh, it is a good profit. 2 crores profit has been earned by that particular seller. But under the Income Tax Act is actual capital gain because he received or he earned a profit from the land, from his own land that he has sold it out. So that is capital gain. So any income earned from a capital gain is also a part of income. Any income that you have earned from your agricultural sector is also a part of the income. So income is not exactly the one term. It's a very broad term, right? So income means it's some monetary return from any other sectors, from any sort of sectors is called income. Just hold on for 1 minute. There is some loud music outside the area actually. Okay, just hold on for 2 minutes, students. God, what the hell is going on outside? God, what's just for 2 minutes, students. Just okay. Let's continue here. So the income is also, you can say, earning. It is also called as the earning part. It is an earning or containing income of the business firm. If you earn any income, any sort of income from your business and profession, from your any of the company, or you can say from any definite source. As I told you, salary is a definite source, business is a definite source. So any income that you earn from definite sources, agriculture sector is a definite source, right? Capital gain is a definite source. So that particular income considered as income under section 2 subsection 24. And income includes three categories: that any income that you earn in cash, any income that you earn in kind, that is without any monetary terms, and any sort of gifts, either would be in cash or in kind. It always considered as income under section 2 subsection 24. These sections is considered under the Income Tax Act 1962 in India. So if we talk about other countries, these laws will be changed, right? So there would be a different laws according to the calculation. There is different laws according to country wise. But in India, the income can be defined under section 2 subsection 24, right? So it includes income in cash, income in kind, that is without monetary. If somebody has given you a land of a piece of land, right, and using that land you are earning some sort of income, so that income is considered under section 2 subsection 24. Any sort of gifts, it would be a property gifted to you, and you are putting that land or property on rent, and you're getting the rent every month of rupees 1 lakh rupees, right? So that termed as income under section 2 subsection 24. So this is an overview of the income. So right, every income is calculated under various categories. Like you need to understand it, how to calculate income under capital gain, how to calculate income under salaries, how to calculate income under from house property, how to calculate the income under agriculture sector or agriculture farms, right? So every these are the particular, you can see, units in separate blocks. So when that blocks comes, I'll teach you step by step calculation practically, and at the end we can take up a full-fledged question to understand that how to estimate the income from different sources. Let's proceed for the further. That is meaning of dividend under section 2 subsection 22, right? So if we talk about the dividend has
Excuse
many
sir.
meanings. Yeah. Could you please mute your speakers so that I can continue and wind up the session on time? Right. So if you have any questions or
Oh,
queries,
all right.
you can ask me at the end of the session.
All right, sir.
If you want to ask, please
All
let
right, sir.
me know. Still you have any doubt?
Okay, I should ask now, sir. Yeah, my question is the difference between income in cash and in kind. That is what the difference I want to know, sir.
Okay. So income in cash means that, like for example, let's you took a property, you have purchased a property, right? And you have put it on rent. So in case the rent you have not get in your account, you are getting in cash. So that kind of income, the money that you have earned in cash from that property, it's also part of your income, and that is taxable, right? So the in kind means that you are getting some sort of gifts, you can search some sort of properties, you're getting some sort of money, right? But you can see it's from the property to property. You're not getting hand some sort of money. You're not getting any transaction is not done without any monetary terms. That is in kind. Income earned in kind means the lotteries, the puzzles games, right? If you see online rummy, where the people, the students earn money in lakhs or in thousands. Have you played rummy online, students?
No.
Have you, have you played
No.
have you played any lottery exactly? Because that is in kind. That is you are not getting any income, but suddenly you will get a huge amount of money. Suddenly, that is not your regular income. So that is count as in kind.
Understood.
Yeah, all right,
Right? So
understood, sir. Understood.
income that you have a regular source of income, either you get from properties, either you get from any other sort of sources, regular income. That is income in, you can see cash, would be cash, could be check, would be account transfer, would be anything. That is also part of your income. In kind, that is not your regular source of income. You are getting suddenly in some sort of puzzles, winning lotteries, some winning puzzles. You go to the casino and you have played a games and you have earned a lot of money in kind. Either you can take up a cash or you can take some accessories at home, but that is not your regular source of income. But then still, it is also a part of your income because you have earned it. And third is like gifts. If you get a gifts of any sort of properties from your families or friends or relatives, and you will get some sort of, you can see you are earning something from that property. You have opened up your business in that property in some sort of some specific purpose. And this is also source of regular income that also considered as your income part, as also part of your income, and that is taxable, right? If under the income tax act, it depends according to the rules, because the rules is changed according to time. So when these particular topics are occurred in the calculation, we'll explain separately on that. Any other questions?
Hello, sir.
All right. So let's proceed the further. It is meaning of dividend under section 2, subsection 22, right? So distribution of profit. If any profit has been distributed that earned by the company, it's dividend. If any debenture, debenture is a product. It's a type of, you can say, product of the company. Shares. Hope you have learned these two terms under financial accounting, right? Or in your high schools. So if any company distribute debentures or share by way of bonus, oh, you will get a bonus on the occasion of any festival in the form of shares or debentures. It's dividend, right? If at the time of liquidation or the company is getting winding up, right, any distribution made by the company to their shareholders of out of their profits, if any profit has been distributed at the time of the winding up of the company, is also called dividend. A part of the profit earned by the company and it distributed among the members of the company, right? That part of profit is dividend for them, right? For example, you are all working in a company and company has earned, right, 100 crores profit. right? And with that, it's some percentage of profit is distributed among all the employees of the company. So whatever the amount that you are getting, right, is dividend for you, because you are getting a profit out of the profits earned by the company, right? At the time of the winding up, still you are getting any profit, or the company is distributing any profit among the members of the companies, among the employees or employers of the company. That is also called dividend, and that also considered as dividend under section 2 subsection 22 of the Income Tax Act. When any capital is reduced by the company or any distribution of profited to the shareholder. Now question arises is, who are the shareholders? What is the shareholder? Shareholder means, shareholders is that person or is that member of the company, right, who are getting the any portion of the profit or distributed by the company out of the profits to them. It's dividend, right? And who get the dividend? It's shareholders who receive that part of the profit and become the member of the company. So shareholder is that person of the company who receive some portion of the profits out of the profits which has been distributed by the company. So if any capital is reduced, right, by the company, and it's still any profit is distributing to that shareholders, and that portion of profit is it's counted as dividend under section 222. That means section 2 subsection 22. So the overall conclusion is any portion of the profit at any situation is distributed by the company to any member of the company, to any employees of the company. That portion of the profit, it's dividend, or it's counted as dividend under the section 2 subsection 22 of the Income Tax Act, right? So if if a company distribute profits, that is dividend. If a company distribute a debenture or share in the form of bonus, of course, because bonus is also being is also being earned from the profits of the company, and that is also part of the dividend. If at the time of the vendor winding up or the liquidation of the company, or if it's still winding up, at the time of the winding up or liquidation of the company, if any profit or any portion of the profit is distributing among the members of the company or the shareholder, it's dividend for them, and it counted as dividend. And if any capital is reduced by company, if any capital is reduced by company itself, and still profits, some portion of the profit is distributing by the company to their shareholders, that portion is also termed as dividend. That portion is also counted as dividend under section 2 subsection 22 of the Income Tax Act. Any doubts in this? Because it is a very important concept.
Sir, I have a question. So, like, you are working for a company, then
Okay.
they give you bonus apart from your salary. Is that
Okay.
called dividend as well? Is that called dividend as well? My
It's
question is
also,
it called dividend?
it's
Is it
dividend.
dividend as well? Okay.
Okay.
Clear, sir.
Okay. Hmm. If you're working in a company and you will get some portion of the profit, right, and you earn that portion of the profit which has been distributed and made by the company, it's dividend for you, right? Now we talk
Yes,
about
sir.
income tax liability. What is income tax liability? Anybody knows about it? What is the meaning of liability? Liability is outstanding. It refers to any outstanding amount. Anything? All right, I'll explain what is income tax liability of a person. If any person have shown any unfair income and he has tried to hide by paying up the taxes to the government, directly to the government, right? That means that particular person is in default, and the tax has been imposed. That means that any outstanding taxes which he has hidden while filing up a income tax, so that portion of outstanding which has been hidden by them during the calculating the income tax, during calculating the tax from out of the income, that portion which is hiding up, that portion is called income tax liability. So any income, a tax is taxable on any income that is earned by the person, right? And at some couple of time, that tax, it's not exactly what is calculated. The tax is something more than that. That means some sort of tax is outstanding is to be paid to the government, and that tax outstanding, it's called the income tax liability of a person. But the question arises is that how we came to know the tax liability of a person. These are the three categories. There are three factors. First, we need to check on that whether the particular candidate is a residential status of a country or not. They are the rules. We will read out in the upcoming slides that whether the person is a residential, having a residential status in India or not. We need to find out first to estimate the tax liability of a person. Next is previous year. Whatever the income the concerned person have earned, right? That income is during the previous years is correct or not. What they have calculated on which the tax is taxable on it, whether it's true and fair, we need to check on it. And if anything unfair, so the outstanding tax liability would be imposed, and he or she has to pay to the concerned Central Board of Direct Taxation. Next one is assessment year. Assessment year is also important if a person is want to pay a tax on the income earned of all the previous year. Like for example, I have paid a tax of the previous year of 2022 to 23. So my assessment year would be 2023 to 24. So I am paying a tax on the income of previous year for the assessment year, that is 2023 to 24. So we need to check on to find out the income tax liability if any unfair has been, any misconduct on the income, anything has been hidden, hide from calculating the tax on the income. It means it becomes a tax liability of that person. Previous years, if like for example a person has to file for 1 year, he need to calculate the tax on his income of one previous year. But when that one previous year, he has hide the income of 3 months and just shown and paid the tax. And while estimating by the concerned authority, local authorities, about the tax, oh, the centene, some couple of months or something is hidden from while estimating the tax. Then when they find out the exact amount of the tax, it means it becomes a tax liability of that person. It just has to pay to the concerned local authority, and a specified notice to be given to that particular person, and need an explanation of it. and he has to explain that why you have hidden 3 or 4 months income during that one previous year, right? The next one is income of the business of the previous year is assessed in the same year. As I told, that there are various sources, there are various categories where whose income of the previous year is also being assessed in the same year, and these are the particular categories. Shipping business of non-residents. So, if any income earned from the shipping business of non-residents during any previous years, their income will be calculated in that particular year only, right? Assessment of persons living India. So those persons who are living India and migrate to another countries. So their assessment of income will be calculated based on all those previous years where they have spent or reside in India, right? Next is assessment of association of persons or body of individuals or any artificial judicial person formed a particular event or purpose. If any association of persons, any body of individuals, right, or any artificial judicial person, whatever the particular for everything has been formed for some specific purpose. That means whatever the income earned will be calculated on the previous year only, and that years will be considered in the same year. That means same year means if you are calculating the income in 2023, that means whatever they have earned during all the previous years, they all will be counting to estimate the tax on that particular income of all previous years, which has been earned by association of persons, body of individuals, or any artificial judicial person which has been formed from some particular purpose or event. So if something has been formed for some specific purpose, then their income will be taxable, right? Next one is assessment of persons likely to transfer property to avoid tax. So of course, there is also a category, there is also need to assessment, there is also need of doing assessment of those persons also who are trying to transfer the property or to avoid tax. And next one is discontinued business. If suppose if I am living in India and I have discontinued the business, of course, whatever I have earned during all the previous year from that discontinued business, that income is considered to be taxable, and some sort whatever the tax to be calculated, and that will be paid to directly to the Central Board of Direct Taxation or directly to the central government, right? So these are the categories where the income would be counted of the previous year, and whatever on that year on which you need to calculate the income of all those previous years from various categories, that is shipping business, any persons who are living in India, any association of persons, body of individuals, or artificial who is formed for some specific or particular event, assessment of persons who are trying to transfer their property to avoid tax, or any discontinued businesses. Right? Any other doubts in this?
Excuse me, sir. Excuse me, sir. I'm
Yes,
not
yes, please.
clear about I'm not clear about the business of the shipping business of non-residents.
Yes. Okay,
I'm
you
not
have not.
clear. I'm not clear.
This is not true. If any people, if any residents, if any non-residents who are living in India and doing a shipping businesses from India to other countries or other states or within the states of India, so whatever the whatever the income earned from that shipping business, knowing this fact that he or she is not resident in India, he has no residential status in India, still their income will be he or she was in India, right? Whether knowing this fact that he or she is a non-resident, but they are doing shipping business in India, and within India or outside the India, their income will become taxable because they are doing business in India, whether knowing it is resident or non-resident, but they're working in India. Their shipping business in India. So the root of their business is in India. So their income should be taxable during all those previous years. Still, they are hiding that income, but still the authorities will able to find out that how the tax has been estimated from such non-residents. This is it's all clear to you, I believe.
All right, clear, sir. Clear, yes.
The next one is residential status versus citizenship. So it is very important. You can say terms to understand in terms of tax. So when we talk about tax incidence, that means the burden of tax of one person shifting to another person. So it's totally depends on two terms, that is residential status and citizenship. So when we talk about calculating the income of any business and profession of any company is based on the residential status of the person rather than their citizenships, right? So when in India, if a person is non-resident and he has spent a couple of 182 days or more, that means whatever they have earned during that particular 182 days, their income will become taxable, and that is termed as residential status of in India, right? So the determination of residential status is very important to find out on whether the tax is applicable or not, whether whatever they have earned from other sources of business residing in India or not residing in India, that will came to know according to their status. That is that how many days, how many months, how many years the person has been reside in India or not. Right? So there is a difference between the residential status versus citizenship. So citizenship is something a very broad category where you will get a permanent, you can say residence a permit, and you have to long consecutive or all the previous years that you spent in one country. So that is a citizenship. Like let's take an example. If that is a birthplace, so if you have birth in that particular country, you are a citizen of that country. But residential status means you are not a citizen of that country, but still you are having a business situated in that country, and we're operating in all over the countries wherever is applicable that business stands for, right? So and that particular word is called knowing how to estimate the tax of that business. So this is the term that we used under Income Tax Act 1963, right? Rather than knowing their citizenships, right? So this is all about the income tax act, that residential status under income tax, it's very important. It's a very important concept to determine, to understand the various rules and that how you estimated whether this particular candidate who are doing this business in India is residential status or not. So there are various conditions around two or three conditions, and out of these two and three conditions, if the one condition has been fulfilled by the resident, right, or a non-resident, he become a resident status. He got receive a resident status in India, and that income, whatever the income they have earned during that particular business during the previous years, that income is taxable, right? In fact, if any Indian, if any you can say Indian who has migrated to another country but still they have business in India, right, Then all, and they have spent after migrating to the other country and staying in India in 182 days during the previous years, right? That means their income is equally taxable in India. So there will no exemptions to be given to such particular candidates who have reside a couple of days, which has been conditioned during all the previous years, and they have fulfilled. And it doesn't mean that their income wouldn't be taxable. Of course, their income would be taxable if they have fulfilled even a one condition of knowing the fact that whether it is a resident or not, right? So it is very important under income tax. And in the next upcoming first block, the resident, knowing the fact that, knowing the chapter, there is a next chapter, is a residential status of a particular of in India. So there are various three categories of resident. There is ordinary resident, right? There is a proper resident, there is an ordinary resident, there is a, you can say, non-resident. Out of two main conditions, there is some exemptions also. When you talk about the you can say ordinary or non-ordinary residents, of course they have to fulfill at least one condition out of the three conditions, and non-residents means they have not fulfilled any of the condition. So what are the condition of that you become a resident of the country? If any person who has spent 22 days or more in India, right, he becomes a resident, right? And if a person out of the you can say 10 years he has spent the 720 days or more in India, he also become a resident of India. Resident, he also receive a residential status of India. That means he's a resident of India. So these two conditions, if any one of the condition means either he spent 182 days, right, or more than 720 days, right, or 740 days. So if any person has fulfilled one condition out of these two conditions, he become a resident of India. If any person has doesn't fulfill any of the two condition, he become non-resident, right? If any of the person has fulfilled the condition or any of the condition, that means he has become a resident, ordinary resident as well. So there are some various exemptions also which you need to check on and you need to study, so that you will get to know the exact portions which need to understand the concept of the residential status. So on that, in the next session, we need to learn that how to estimate the condition, how to understand the conditions. After understand the condition, we check on the various categories of the persons. We need to check on the residential status of the Hindu undivided family. We need to check on the residential status of the company as well. We need to check on the residential status of the body of individuals. We need to check on the residential status of the, you can say, artificial judicial persons, whether it's applicable or not. So everything we have to check on that this company is a resident of India, has formed and become the resident of India of any person who are operating this company. So we need to check on and to calculate it whether it is resident of India or not. So one by one we study. It's a very you can say easy. It's not so difficult at all, but it was lengthy. You need to understand, you need to remember the conditions, you need to remember the exemptions, which is very important to understand first, then apply into the practical questions. Because your practical questions is always based on the rules of the Income Tax Act. So if you remember the rules, you can easily you can say fulfill the criteria of the practical questions. If you skip the theoretical or part or the rules of that particular topic, that means you are skipping something, and something is will be wrongly happen in the calculations of knowing the fact of you can say titles or the understanding the concept and memorizing the rules. So if you practice more and more question, the rules can be you can easily grab and it will easily remembered, right? If not, so you will need more and more practice. You need to do more and more practice so that the rules can be easily memorized and you can easily fit into that question and easily calculate the answers correctly and get the full marks of that in the final examination. So let's take the most important chapter, and one of the questions would be asked practical or practical. Anyone. So definitely we ask your final examination, and we will do this particular task in the next upcoming session. We will discuss in detail these particular rules and regulations of these and do step-by-step questions so that you can understand the concept, and once you understand the concept and you put that concept into the practical portion, you can easily grab the topic. And now we come to the total income and tax payable. That income has always been imposed on the total income of the particular person, right? Such total income has to be calculated on the provisions which has been contained under the Income Tax Act, which I already told you that every rule, every procedure has to be followed according to the Income Tax Act 1961. Now has been reintroduced to 1963 now. Income Tax Act, right? So these are the particular, this is a procedure actually. This step by step you have to calculate. So once you will gone through whole income tax law and practice, so this is the procedure that you need to calculate the tax on your total income, whether you have whether your income is from salaries or business and profession or capital assets or any other source of income. So how you calculate? So this is a procedure. This is a step by step you have to follow up. So when you follow up the step by step, definitely you will get the correct answer of your calculations. So the first one is that how you determine, as I told you that knowing this fact is whether that particular person is residents of India or not, and that is the first step. That to be begin to find out, and it all depends on the conditions and rules and regulations. So this is first step is determination and residential status of a person. Second step is classification of income under different heads. As I told you that how you classify the term persons, it would be individual or it would be that. But the most important is that if any person, then what are the sources of income that he earned from various sources. So you under various headings like income is I give an example: income from salaries, income from house property, income from capital gain, income from farming, income from lotteries or puzzles or horse races or anything would be. So as I told you, the income you are giving in kind. So something you have won a prize amount, a huge prize of amount, that is you can say in kind, right? If you got earning from that gift something apart is also part of the income, right? So this is all about you classify the income under different headings. So this is unit. You will get to know, you will learn the terms, you will learn the terms of different incomes and how you calculate that income under different headings that will come under second block, right? The exclusion of income not chargeable to tax. So there are the various incomes which are not chargeable to tax. Which are chargeable, I already told you three basic terms in the basic concepts. But when we talk about the broad categories of the income, the list of the income, which I will show you in the next sessions, that these are the incomes which is not taxable, just not chargeable to tax, and these are the list of the incomes, a broad list of the incomes which are taxable, right? So you need to check on and you need to exclude while calculating your income that whether this particular term, whether this particular source, it's taxable or not. Next step head. As I told you, if you are calculating, you can say income of a residential status, of course, you need step. If you are calculating income from salary, come to the step fourth. If you are calculating income, calculation parts means you are following up the rules and regulations of calculating the income from salaries. You are following the rules and regulations under the Income Tax Act, under the income from house property. So this is come under step four. Then clubbing of income of any, you can say, spouse and minor child need to club. If you're married and your brother, your spouse, and some your children's grow up children's have earnings, so you can club that income. How you club, how you estimate of that clubbing of income, there is a different procedure. So you need to learn for that, that how would be set off and carrying off or set off the losses. So whatever the losses has been occurred from your capital, from your land of a property or any of the properties, that you have to carry forward, you have to set off the losses. Okay, we recovered some other couple of consecutive years, and then again we use that, again we start up a new business and set off such, cover up such losses and earn profits and show up that is a part of the income. So how you do it, what is the procedure, that you can learn under step 6. Then calculate of gross total income. When you add everything, add every step till first to 6, when you total it, it becomes gross income. Now your taxation begins. That, as I told you, your total income, your deductions would be the deductions, rebate deductions हो गई, surcharge हो गया, tax duties हो गई, cess हो गया. So when you do all these deductions, you will get the total income. So you will get the total income. So one, the total income you will get to know, then you will learn income tax slabs. Every country is having their own income tax slabs rates. So if a person is having an income below 5 lakhs, there is no tax. If a person income having 5 to 7.5 lakhs, it is 10% of his income taxable. So if your total income is around 6.5 lakhs, so that means it is taxable. So 10% of tax will be taxable on the total income, right? So this is all about. And if you talk about that below 5 lakhs, there is no tax, there is a nil. If any income categorized between 5 to 7.57 lakhs 50,000, 10% of income is taxable. If 7.5 to 10 lakhs, it's 20%, and if more than 10 lakhs, it's 30%. Right, so this is an income tax slab rates during the year 2023 to 24. So accordingly, if this particular rules has been formulated, already formulated, and every person is following these rules according to their income which has been estimated, and accordingly total income which has been estimated, and accordingly the tax has been charged on it following the latest tax slab rates for the year 2023 to 2024. Now, as I told you, that application of rates of taxes on the total income, which I've already told you, right? Then education says any secondary categories or any higher education tax that will be deducted, or any advanced tax or TDS if any you have get from your properties of selling out. If you've sold the properties, you will receive the tax deducted at source. So there is a separate chapter of it. Then we will consider in the later portions of your sections, right? So for today, this is a charge of income tax. So, of course, tax shall be charged at the rates prescribed for the year of annual income tax, which is I already told you that is income tax slab rates for the year 2023 to 24. According to the incomes, you have to apply your tax rate, right? The charges on every person specified under section 231. Whatever the charge has been applied on every person, like if it is, so that comes under section 2, subsection 31. The tax is chargeable on the income earned, total income earned during the previous year, not for the assessment year. I already told you, whatever the income you earn of all the previous year, accordingly, the taxes will be calculated on your that income that you have earned on your previous years, right? So there is also an exemptions. Just when I already, like I already said, it is provided under section 172, 174, 174A, 175, and 176. So whatever the exceptions has been put on, and if your case is considering in the such exception under these sections, definitely then it will be non-taxable. So your income is tax free. So tax shall be levied in accordance and be subject to the various provisions contained. So whatever the conditions, whatever the provisions contained in any of the income tax act, it always been followed. You cannot free from such provisions, and you have to follow it accordingly, right? So that's it for today about all the basic concepts that we have learned during this first sessions, right? I believe you have learned plenty of terms during this session, and in the next session we learn the new more concepts related to residential status of in India, right? So if you have any other doubts, please let me know.
Hello, sir. I have a question.
Yes, tell me.
Yeah. My question is it every year that the rate of the tax is being prescribed?
Yes, it is compulsory to follow up the prescribed tax slab rates, which has been formulated, which has been announced, and in the Parliament under the Ministry of Finance Act, right? So whatever the total income would be estimated, you have to follow it accordingly, right,
Uh,
Ennis?
under- Understood, sir.
So you cannot free from such slab rates. If your income is below 5 lakh total income, you are non-taxable, right?
Yes, sir.
Yes.
Understand.
Any questions do you have?
No, sir. It's all clear.
Okay, great. Just wait for 1 minute. Just yeah. Any other questions, students, you would like to ask me?
At the moment, no, sir.
Okay, so we wind up this session by, like just now, and we will continue next session on 25th of September. The rest we will learn the residential status, the rules and regulations, and the practical questions as well. Right? So see you on 25th September. Till then, have a great day and take care of yourself.
Well, thank
Okay,
you.
bye bye. Bye.
Thank you very much.
Bye bye.
Bye,
All
sir.
right, bye
Bye.
bye. Bye bye.
Thank you so
Thank you
much.
so much.
Hold on. Goodbye.
Hello, guys. Let us see your faces now. Which one is hiding his face
Hello.
again?
Hello, students. I'm here. Hello, students. Hello. Are you listening me?
Hello, ma'am.
Hello, how are you?
Am I audible?
Hello, ma'am.
We
Oh,
are doing.
hope you all are doing well.
Yes, ma'am.
Doing
You
well.
guys
Yes, we
just
are.
had an extended class, I guess. Why are you turning on your videos?
Very well, ma'am.
Please turn it off. Okay. So, as you know, today we are here for the subject financial accounting